Welcome to Beyond the Corporate Ladder, thoughtful conversations on leadership, growth, and long-term perspective with your host, Stephen Lee Thomas. Each episode features thoughtful conversations with leaders and operators about growth, decision-making, and what it really looks like to build a meaningful life as your career evolves. All right, everybody, welcome back to Beyond the Corporate Ladder. Today, I have the dynamic duo, husband and wife, Candice and Corey Muldrow. Thank you so much for joining the show today. I know you both have a great background, and I want to explore how you got where you're at today, the decisions you made, and some of the things that have changed in your journey to get where you're at. So, first of all, thank you for joining me today.
Thank you for having us.
Glad to be here.
Absolutely. Um, Candice, we'll start with you. Can you give us a little bit of your background and how you got to where you are today?
Sure. I am a third generation real estate investor. So I was always in me to want to invest in real estate. So I met Corey. We started dating and we started talking about planning our life together. And we both had a deep desire to invest our money um, in real estate and with hopes that it would grow and it would create wealth for us and the next generation. So anyway, we had our corporate careers. You know, Corey, he'll tell you a little bit more about that on his side. But for me, I started off in broadcast journalism when I graduated college. Then I worked in that role and I was like, I am not making enough money. So I decided to join a sales company, but actually a digital marketing company in a sales role. And I worked my way up through the ladder. I did training, sales training. I did partnership relations. And then I stayed with that company for about 8 years. And then I decided that I would start our management company. Well, we decided I would start our
Hmm.
management company and quit my job. So that's what I did. And we've been running our management company and our asset management company for years now.
Awesome. And Corey, how about you? Tell us a little bit about you, how you got started, and what you all doing now.
Sure. So I took I graduated from UT and I got my bachelor's in nursing. So I was in healthcare, trauma. I called myself the adrenaline junkie at that time. And then I met Candice and I went back to grad school. I went to uh, anesthesia school, CRNA school, where I learned how to practice anesthesia and got my doctorate there. And we came back to Dallas and I was practicing for years here locally. Started my own first venture, first business as a contract anesthesia provider. And we had read this book, Rich Dad Poor Dad, and at the same time, I was listening to Dave Ramsey on how I can pay back my student loans because I had well over six figures. So the plan was initially to live on one person's income and then kind of take the other person's income and just pay off the student loans. Well, I learned about how to invest in real estate and I just kind of canceled that whole plan. I started buying single family homes, Candice and I, and then that kind of started to snowball. And, fast forward a few years, we have a multifamily portfolio and a property management company.
So when you take a step back, it's interesting. So Candace, you're saying you were spending some years climbing the corporate ladder, and then you're kind of like, I'm gonna tap out of that. Your first role, the first job you had in broadcast journalism, you quickly were like, I'm not making enough money there. Um, what you said you read Rich Dad Poor Dad, but what do you think like ultimately was that deciding factor? So you guys are in the multifamily space. Like that's a big jump from like one door to many, right? Um, what do you think really was like the defining moment that's led to where you're at today?
I mean, I think it took that first big leap, buying that first single family home. I mean, I think Candace has, different opinions on how we all got started, but I just looked at the numbers. But what do you think, Candace?
So there were several parts of our journey, big, major parts of our journey that got us to where we are today. The first one was Corey refused to not buy this single family home. So right before, while we were engaged, preparing
You
for our
said
wedding.
refuse to not buy. So you told him no, and he said no, right? Is
Yes,
that what I heard? Okay. All
that is
right.
exactly what you heard. So I was planning a wedding in Cabo San Lucas. So, we were spending this money on the wedding, making all these decisions, and Corey wanted to buy the single family home to start our journey in real estate before we left for a wedding. And it was frustrating to me because I'm like, this is too much. Per Corey, this is usually Corey, no, he likes to have a lot going on. So very ambitious. So anyway, I conceded and we bought the single family home. We got it renovated. We got at least a renter in there right before we left, so we had some additional income as a couple when we came back from Cabo. So for our wedding. So I'm
So
so glad.
you all bought that, did some work on it, got someone in there right before you went to get
Yes,
married?
yes, yes.
So you're like wedding planning and buying a house as a rental property all at the
Oh, and
same time
renovating a
and renovating it.
big renovation.
So you
Yeah,
do
it
like
was
to be busy.
it was ugly.
You're
Yeah, man, it set the groundwork.
So that was a major part of our journey. The other major part of it is when we decided that we wanted to do multifamily ourselves. So we bought a few single families and then we said, you know what, this multifamily thing makes a lot of sense. So let's invest with someone else that knows what they're doing and let's invest as limited partners. So that's what we did. And then we really got interested in putting deals together, sponsoring deals ourselves. And we would sit and have coffee with the folks that we were invested with to learn from them, to get as much information as we could so we could make the decision if we were going to make the jump to multifamily. And everything about multifamily made sense. Um, so that's what we did. And we bought our first 17 unit in Arlington, Texas in 2017.
And what is the largest acquisition that you guys have since you purchased that 17 unit property?
Yeah, so since we've been on this journey, the biggest property is 270 units.
Okay. So then with that, like that's a big gap. So one could argue that, well, whether it's 17 units or 200, how many, 200, how many?
70.
270, 17 or 270, right? Same amount of effort. I still got to do the paperwork. I still got to get the loan. Like everything's the same, just the dollar amount. Okay. Well, arguably, what is the decision making? How has that changed for you from going from something small to actually getting to something that large?
You scale. I mean, you start off, red house, green hotel, that whole the monopoly thing. So you
Hmm.
you 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 chip your teeth on the smaller stuff, make sure you got it down, and then you scale up. And we didn't start at, the next deal wasn't 270. We went to 102, and then 256, and then 200, and then 270, and then the latest one was 152. And you start slow and then you ramp up. So I think that's really just the best key. But more than anything, you just got to get started. You got to do it.
Right. And remember, we're vertically integrated. So we have our management company that runs the day to day of those assets that Corey just named. So a big part of this whole journey was building our management company and going from 2 employees to now we have over 30.
Oh,
So,
wow. Okay.
and that's a huge ramp up. So when you're buying, you're going from 17 to 100 units to 256 units. That is a big ramp up. Um, and you know, we went through a lot during that time. But it was a great learning ground for us to be where we are today and have the systems and processes that we put in place for our team and to run without us. Ask it for you know, every question. You know, they know the system, they know what our expectations are, and we can focus in on the numbers and making sure that we're driving performance.
So you started with two, and now you have a very large organization. What have you had to learn about leading an organization that large that you didn't know when you first started?
What you start off doing is being a to-doer. Basically saying you're telling your team what to do every step of the way. You're kind of micromanaging in the beginning because you don't really know how things are supposed to run. But as you mature in your leadership, you go from task doer to delivering outcomes. So you tell them the outcome and you wait for them to figure out a way to get to it. So that's the difference in the leadership over the maturity of the years that you've had.
Empowering decision making?
Exactly.
Okay. All right. So rather than telling them exactly what to do step by step, you're saying this is what I need done, figured out. And then you got to leave a little bit of room for mistakes, I'm assuming, right? Like maybe they're not going to do it
Absolutely. You
100%.
that, and that's the coaching. You give is outcome measure coach. So you give them the outcome, you see how they're tracking towards it, and then you coach them to get better. But you've got to give them that slack and that leeway. And depending on the role, depending on their responsibility and title, it grants how much leeway you can give them.
And to add to that, a, a lot that we've learned as well is the organization part of creating the the path for them or the structure for them uh, to carry out your expectation of quality, of how you want your residents to experience our company from when they have our first phone call with us as a prospect to when they sign their lease and they get their keys to move into their home to the life of the resident while they're living with us, living at our communities. The expectation that we're going to have regular monthly resident events, that we are going to be inspecting our grounds and our property daily to make sure that we are addressing any deferred maintenance. So, or not deferred maintenance, it better not be deferred, not deferred, but any maintenance issues that need to be addressed. So anyway, and then on top of that, loving on your team and supporting them. So, you know, we do quarterly team appreciation events for our team because if our team is supported, if our team has the education, which we also sponsor the apartment association certifications for our team, if they have coaching calls, if they're supported, then they're going to treat our residents great. Our residents are going to stay in their homes, and our investors are going to make money.
As a husband and wife duo running this business, how do you all decide who does what?
Oh, wow. That's the
Oh
question.
yeah, man, you're trying to start a fight right now, Steven.
No, no, no. Okay, I'll be totally honest. So I remember years ago, I went to my wife and I'm like, "Hey, honey, I really love this multifamily stuff. You want to get involved?" And she's like, "No." I was like, "Well, no, let me help you." And I was like trying to, pull her in. And so we haven't had to like have that dynamic, but I know that sometimes something as simple as like what's for breakfast can be a little challenging of who's doing what. So I have so much respect for the husband and wife that work together and build a business together. I think it's amazing. I think it's beautiful. You get to spend way more time with each other because otherwise, one person does this full time, another person does this full time, and you spend more time apart. Um, but there has to be something said for there's got to be a lot of communication involved If you as a husband and wife are not only going to run a business but a successful business like you guys have?
I'll say it's a continuum, and it's an evolution, so to speak. Because when we got married, I mean, we got married and started real estate at the same time. So real estate has kind of become part of our marriage,
Hmm.
which was great in the beginning, but as we grew, you know, it kind of started to get a little old. So what you have to do is start to figure out a way to separate. So in marriage, you have to be able to isolate the business from your marriage. Otherwise, the two will be intertwined, but you have to keep them separate. Kind of like when you have kids, like you love your kids to death, but the marriage has to come first. So, we're some of the things that we worked out are we use checklists, we have morning huddles, we have quarterly retreats, and obviously you have to have date night.
Right.
So, those are just some of the systems and processes that we're intentional about so that the business doesn't consume and one person doesn't become overworked while the other person is, thinking everything's okay. It's just a lot of communication.
Yes, and no one's going to care about your business as much as you do as the owners and the founders of the business. So, as we scale, as we grow, continuing to have the foundation of me and Corey, who's the vision of the company and the architects as we continue to grow the company, no one is going to care as much as we do, because this is what we started. And, you know, as it continues to evolve, it's great having a partnership because you're able to discuss decisions with each other. Corey has a different perspective and a whole different background with coming from healthcare. Um, his mind, the way he thinks is very organized, structured. And then with me coming from a sales background, I'm very much like drive performance. That's a big thing for me. And then also, I have the I have the desire to coach, and Corey does too. But I have my own set of skills with working with people. So it's great to have that in one package. The challenge as we're continuing to grow is, like Corey said, having that structure
Hmm.
to separate those roles and responsibilities and separate the marriage from the business. And that's always a work in progress.
So let's then talk about balance, finding balance.
Oh, I don't like that word.
No, okay. Here's okay. So we're gonna play on this. So I used to believe that I used to say I'm a big believer in work-life balance, right? Like I leave my work at home. I had a coach one time that basically said bullshit. You are the same person. If you have baggage that you bring from personal life, you bring it into work, and if something's weighing heavy on your work, you bring it home. However, I am gonna use the word balance. Okay, you can give me the word that works best for you. But Corey,
Trade
you
off.
mentioned you plan date night and things like that. You have children, it sounds like, um, and you're growing a business very rapidly from the time when you started to where you are now. What are the things that you do to keep your sanity? Let's just call it that way, to make sure that you're showing up for each other, your family, and your work.
We like to use the rocks analogy.
Mhm.
Like, you're never going to be able to do everything. And when you're in business, like the list of things to do is going to be a mile long. But what you got to do is think of the jar. And if you put in pebbles and sand, it'll fill up and the big rocks won't fit in. But you have to, on a daily basis, figure out what is the priority for tomorrow. And if you focus on the priorities and leave everything else behind, you will move mountains, you will move distances, you will lift boulders. The leverage will be in the right place, but you've got to look at what your priorities are every day and put the other ones on the back burner.
So there's this book that it's probably behind us, called The Gap and the Gain. And the first time I read it, I was just like, oh, yeah, the gap, that's when you're thinking negatively. When the gain, that's when everything is positive, um, this is pretty simple concept, but the second time I read it, it really, the point of it really drove home. And there's a part of the book where it talks about if you journal or if you just write things down at the end of the day, um, write down your 3 wins for that day. And then write down 3 wins that you're expecting for tomorrow. So that goes into the rocks that Corey is talking about. We train ourselves to think, okay, what are 3 things that I can do tomorrow that will move the needle like the most, that will make the biggest impact on what I'm trying to do for the business right now or for our family. So that's what I do, and it really, if I do it before bed, my brain starts working on how to get those things done. First, puts me in a grateful state because I'm talking about my wins, but then I'm thinking about my wins for the next day and what I'm expecting to win at the next day, and my brain is already doing a lot of work for me overnight. And that has been really helpful with keeping me sane, the journaling, and really knowing what my top 3 things are for the next day.
I love that. I might actually steal that. I've done where you every night before you go to sleep, you like plan out your whole day. But to what you all are both saying, which is like focus on your priorities, and if you can pick your top three, like you find a spot to get those done, and if you do that consistently, that's when you make a lot of progress. So okay. Someone might be listening to this episode and they're not nearly as far along as you are. So, someone who's earlier on, what advice would you give them? Something that you wish you knew sooner about achieving success?
Man, I would say the number one thing you gotta find someone who's doing what you want to do and emulate them. Make that relationship. That's the number one thing that I would say. What would you say, Candice?
I would say success. Um, I'm sure everyone's heard this before. It's different for everyone. And I think it's important for me, where I am now, is having that holistic approach to success. So not only do I have the goals that I have for business, but my whole life goals. Because if I have a strong foundation at home, well, first within myself, um, and then a strong foundation at home, then I can really go after those things, professionally, business, philanthropic, pursuits,
Hmm.
to help others. It really puts me in a great place. So, success to me is a holistic thing, and it really starts with yourself, like inner self, and making sure that you are caring for yourself and doing those self care things like journaling, like exercising, and it sets yourself up for success with those foundational things first, and then you can achieve anything.
So you all started off your relationship, which maybe not the very beginnings, but when you were getting married, you were setting yourselves up for a lot of success. There are other people who maybe it's taken them a little bit longer to, or I'm going to go back to what you said, climb the corporate ladder, but now they're starting to look around. They've achieved a certain level of success. And maybe they're starting to think of other things like other types of investments. Maybe I should be getting out of the stock market. Maybe I'm maxing out my 401k. I'm making really good money. Where else can I put this money? So people start thinking about passive income and passive investments. And we kind of alluded to this a little bit with you guys in real estate, but and you guys are actively doing this, but can you talk a little bit more about someone who can actually get started passive investing in real estate?
Absolutely. So, one of the number one things I like to talk about is not necessarily the return ROI, the return on investment, but the return on energy. So you have a very finite amount of energy. Like you can always make more money, but you can never you really have to manage your energy. So I look at the return on energy. So how much work do I have to do to produce the amount of return that I want? So, as we're active investors, so that means we're actively managing, putting in energy to produce a return. But as a passive investor, you have the highest return on energy there. And if you want to call it the return on time, you could call it that too. The return on time is ridiculous as a passive investor. um you make the relationship with a sponsor, someone that you know, like, and trust, and then you invest with them and watch them do the work and send you reports every month. I mean, like, that is probably the easiest thing that you can do. So, Candace, what are your thoughts?
Yeah, I would say join a mentorship education group. Like join a group of other folks where you could get education, you can talk with other investors, um, that you can, or join a community. That way you're learning, you're growing. Let's listen to podcasts, connect with people, learn, because as a passive investor, you still need to know what you're doing. You need to be able to read the business plan. You need to be able to look at the underwriting. You need to be able to know what you're investing in. So, first, get your education, know what you're looking at when someone presents you an opportunity, or you receive a PPM, a private placement agreement. Um, uh, and that way what you're getting into. And then to Corey's point, once that's the most work. And then once give over your capital, then it's like you get your mailbox money or your uh, auto draft.
If
Right?
anyone
Yeah.
wants to get a copy of my checklist for screening those investments, shoot me a DM at the Corey Muldrow on IG, or message me on LinkedIn, Corey Muldrow. You guys can pick that up, and that'll really help and explain a lot of that process.
I appreciate offering that up. That'll help a lot of people. You all have built a very successful business to this point. What do the next 5 to 10 years look like for you?
Man, so 5 to 10 years. So we just came off a pretty fun real estate cycle. Anyone who's been in real estate knows that. But the
I wouldn't
beautiful
call it
part,
fun, but it's been
but
interesting. Yeah, I'll go with that.
yeah,
Very
yeah, it's
interesting.
been educational.
Educational.
So
Yes,
that's
yes.
what we'll
I got a
say.
lot of education in the last few years.
What we'll say is we're about to approach a new cycle. So real estate has ups, it goes downs, and it always goes back up. And I feel like the next few years are going to be our next generation of opportunity. So we're going to get at least another 5 to 8 year real estate run cycle coming up, and it's about to get started. So now is really the time to dive in, double click, get your education, make those relationships, because now we're in a window of opportunity right now. So I'm completely bullish on what's going to be happening over the next 2 to 5 years.
Awesome. Candice, Corey, I have really enjoyed our time here today. You already offered a couple of things. If somebody wants to learn more about the due diligence, if somebody wants to get a hold of you, learn more about what it is you all do, what's the best way for someone to connect with you?
DM us. We're on Instagram, Candice Muldrow. You can find me on LinkedIn, on Facebook. Send me a DM and we'll connect.
Or you can look on our website, mgroupcapital.com. We're all there.
Awesome. Thank you so much, guys. And for those of you listening, I'll catch you guys in the next episode. Thanks. Thanks for spending time with me today on Beyond the Corporate Ladder. If this conversation resonated with you and you feel like you have a perspective that could add value for others, you can learn more about being a guest at beyondthecorporateladder.com. Thanks so much for listening.